And welcome to our monthly webinar for the month of September. Let's start with, as usual, with the speaker bio first. For today, there are two speakers today. The first one is Tirada Chanyingyong. She has been an equity strategist for Philips Securities since 2004, employing a top-down investment approach to look for appropriate investment themes at the right time and updating both institutional and individual investors about the outlook for the Thai stock market. She holds an MBA from Chulalongkorn University, Thailand. The second speaker, Ms. Rasada Tawisang Sakunthai. She has joined Philips Securities Thailand since 1996 as an equity analyst covering Thai listed company in ICT, healthcare, and energy sectors. She holds a bachelor's degree in business education from Chulalongkorn University, Thailand, and has a Master of Science in Business Administration from California University of Pennsylvania, USA. So let's start with the market outlook first, and then we'll pass it to the stock pick for September. For Thai stock market, it seems we are doing pretty well for several months, especially after the military taking control of the country in May, as the index has been surged over 15% from its low around 1375 to the current level around 1590s. So that'll come to a big question, that's what next, how far the index should go. Although we foresee a good prospect for Thai's economy continuing in the fourth quarters and next years, but the markets seem somewhat pricing in all the good news. So the upside seems limited in short term at least, but accumulate in the dips still possible for longer term investor. So today I'll show you some market statistics pointing to a short-term consolidation of the market. So before going to that, let's see a bit on the monthly performance of the index over the past decade. For the graph showing the September has been quite a good month for the markets, as the 10-year trailing average total return was around 1.65%. The gain in September was in 7 out of the last 10 years. And one important reason would be the window dressing activities. This will always come into play by the end of September. However, for this time, a recent strong market runs could reduce the scope of the window dressing. As mentioned earlier about the short-term consolidations, these two graphs show us a risk of that. The first one, the upper left chart shows the 1-year forward earning yield gap, that at the current level at around 4.3% is quite near to the lower bound in almost 4 years, as shown in the chart. The level of 4% or below typically raise the risk of a market corrections, as you can see from here. So right now it's quite near to the short-term collections assets, and the lower left chart, it shows us the PE bands over almost 15 years. Normally, every time when the set index trades above 15 times of PE, a collections will follow. As you can see from the chart, it always happens. In the last 15 years, this happened 3 times in 2007 here, and 2010 around here, and the last one is had been happened in 2013. So at the current level, at the moment, we has been there around, we traded with the forward PE around 15 to 16 times. So it's point to the short-term collection asset. This chart showing the same stories. In a bull market leg up, the set index normally trade above 60-day average, and the PE level of +2 standard deviations normally act as a trigger for short-term profit taking, as shown in the charts here. That was only one time in a year and a half that the market trade over +2 standard deviation here to almost +4 standard deviations in early of this year actually. Now the market has already stand at 1590s or +3 standard deviation around here. So that means more limited upside is expected, maybe around 1560 or 1610 the most. So it would be safe to take a partial profit in short terms and accumulate the dip around 1550s or 1530 at the equivalent to the +1 standard deviation or the means of the PE average, 60-day average. For the investment themes, I would say that for short-term trading purpose, maybe have to more selective the individual share for tradings. However, for the month of September, we have 3 stock picks as usual, which Lasda will come to give you more detail on each stock pick.
The first stock is C-Fresh. We see strong recovery on the cut in second half. The earning poised for strong recovery in second half of this year. Our forecast suggests that on the second half, earning will be much better than the first half, or the prospects of a recovery in the first one, the domestic operation on the back of sales volume growth driven by rising export and strong seasonalities. The second one is overseas operations. Point 2 is strong earning growth outlook for this year. On a full year's basis, we estimate C-Fresh will deliver this year net profit of 388 million, up as much as 216% year-on-year. The forecast is based on assumption. First is full year sales will be up 16% year-on-year to 7,964 million. The second one is margin will improve on selling price increase, shorten contract term to alleviate in the impact of raw material price swing and positive impact on weaker baht. The third is effective tax rate will edge higher on improving overseas performance. Undeterred by U.S. downgrade of Thailand to 3T in TIPS report. The U.S. downgrade of Thailand to 3T's watch rate in 2014, tracking in percent, report that shares of chips producers lower on fear of orders cancellation, but C-Fresh, however, seems to have been unaffected by U.S. action. We see this stock is a laggard stock. Current valuations look compelling at PE multiples of less than 12 times, a discount to the peers. Our target price next year for C-Fresh is 11.64 per share. The second one is Tmr. We will see the good outlook for the second half. This is because of the Sales volume we expect to increase for the second half of the years. The sales set to rise in second half. Sales of high-end mobile handset looks set to rise in second half on the back of the pickup of purchasing power amid improving political stability and new product launch from a number of brands, including the likes of the Samsung, Nokia, and iPhone. iPhone 6 seen as the key to sales growth. Tmr of the late clinched a deal with Apple to sell Apple products at 90 Tmr shops. The launch of iPhone 6 slated for this October should act as a catalyst for the sales growth. Another factor is there is a scope for its subsidiary JMT to see more revenue from debt collection service. In the latest development, JMT bought 6,908 worth of personal loan and credit card NPLs from Aeon. We foresee that our forecast suggests that on the second half profit will be better than the first half as a pickup in purchasing power and the launch of the iPhone 6 should push revenue higher. On the full year basis, we estimate Tmr will achieve 391 million net profit and its profit will continue to grow to 22.8% year-on-year next year to the net profit of 480.69 million. Our forecast target price for the year has an upside of 15.2% and the dividend yield is around 4.2% because the number in the presentation is higher because the price now is going up quite a lot. The third one is SF. SF is outlook for the second half is brighter. A stable and steadily growing stream of revenue, recurring rental income contribute to 70% of the total revenue and 23% of the profit contribution from Mega Bang Na. Average rental rate will also be raised by 5% per annum. The brighter outlook for the second half, year-end spending sprees, which would be the positive for revenue sharing percentage, which account for 10% of the rent, new tenant, and change of the tenant, as well as lower rental discount should brighten the second half of the outlook. Our forecast suggests SF will achieve this year pre-exceptional profit and a net profit growth of 17% and 14% respectively. The first half pre-exception profit net profit figure account for 50% and 46% of the full year target respectively. Total gross leasable area is projected to rise 66% and pre-exceptional profit is expected to exceed 100% from current level over the next 5 years, driven by Lumpini Township, Rangsit Khlong 1, and the expansion at the 2 existing projects as well as Mega Rangsit and Bang Yai projects. We see this stock is quite cheap. In our view, undemanding evaluation we let SF shares buy for this year target price of 10 baht per shares, comprising 5.9 per share from SF project and 4.1 share from Mega Bang Na projects. Now that Mega Rangsit and Bang Yai projects are not yet built included in the valuation forecast.
So that's all the presentation from today's. Welcome to the questions. Okay, that I guess that's all for our presentation today, and thank you and see you next time.